Hello and welcome to BloombergQuint. You're joining us on this special broadcast because the State Bank of India has come out with its third quarter results, the October-December quarter. According to the bank's disclosures, 5196 crore rupees worth of net profit. This, of course, compares to last year in the same quarter where the bank had some one-off items such as recoveries from the SR Steel account due to the insolvency and bankruptcy court. So if you adjust for that one-off, then of course the profit growth is looking much stronger. We have with us on this call Mr. Dinesh Khara, the Chairman of State Bank of India, to take us through these results. Mr. Khara, welcome. Let me quickly first ask you a question with respect to the net interest income side of the story. Profit, we all understand the market is seeming to take it very positively. But on the NII side of the story, there's a 4% growth. So just trying to get a sense, is this a conscious strategy? You don't want to grow very fast, or is it because the base is so high that any growth will look small?
Yeah, that also is a fact that, our base is quite high, and but still the focus is very clear that we have to ensure that we stick to the NIMs, which are healthy. And going forward, we will continue to follow this principle. And hopefully, we will continue to create value for all our stakeholders.
Right, sir. As far as your advances growth goes, now, of course, you have disclosed in your results that 16,461 crore worth of slippages as of 31st of December, they carry the Supreme Court's dispensation. So let's take that portion of the book out. But for the rest of your loan portfolio, you're looking at a 7% advances growth for this financial year. You're looking to reach double-digit growth by the next year, second quarter of next year. Wanted to get a sense of what is giving you that much confidence. Are you seeing certain sectors turning around?
Well, the major contributing factor is the revival of the economy. We have seen that in this year, in this financial year, we have seen as and when the economy has opened up, wherever it has opened up, we have seen the rebound of the demand. And with the rebound of the demand, we have seen the revival of the economic activity and the borrowings also by the corporates. And the net result of that is that when it comes to corporate sector, maybe the mid-corporate sector, where we have actually seen that the availment of the limit is as high as about 40 to 50%, which at the beginning of this financial year was very low. So I think that is nothing but a reflection of the confidence which people have. And once people regain the confidence, they start taking loans from the system. The second aspect is about creation of the additional capacity. I think once the capacity utilization goes towards 85 to 90%, we normally get to start seeing some kind of a fresh demand for the term loans also. Right. Having said that, we have already started seeing demand from public sector for the term loans, and we have already sanctioned almost about 25,000 crore worth of loans into the public sector for the term loans. And I would say that there is still unutilized limits almost to the extent of about 2 lakh crore. And if at all demand improves, all that will lead to the improvement in availment and also some kind of a disbursement in the term loans also. So I think these are the factors which gives me confidence that with the revival of economy, maybe towards the second half, we'll get to see the improvement in the credit growth and we'll inch towards the double-digit credit growth also.
Right. Want to get a sense from you with respect to, you said 2 lakh crore worth of unutilized limits are left with you. Just trying to understand, where these unutilized limits are. Is it largely in the large corporate segment of the book, or are smaller companies also, not utilizing their limits fully?
It's primarily in the large corporate and the mid-corporate segment where we are seeing that, and also there is a reason for that. In our presentation, we have indicated that the cost of borrowing for the corporates have come down significantly. And it is also a function of the liquidity in the economy. It has come down as low as about 3 to 4% kind of a bracket it has come down to. So I think once the economic activity revives, that will lead to a scenario where more and more such liquidity will get sucked by the corporates. So we have actually seen, if we reckon our growth which we have observed in our investment book in the NCDs and TPs, then we have seen a growth of about 8% plus. So that is the kind of a difference which we have seen. And corporates normally will try to exhaust all their options about raising from the market. I mean, wherever they can raise cheap, they will go there. So I think that is a kind of a scenario. And once they will, the liquidity will get sucked by the economic activity. Perhaps we'll get to see some kind of a growth in the availment from the banking system also.
Okay. As far as the asset quality situation is concerned, you've already said I think you're probably the only large bank to show an improvement in the pro forma numbers. Most others have actually seen that number go up. But getting to that, you've given some guidance that the fresh addition of bad loans for the last quarter of this year will not be that high. You're already about 41,000 crore worth of stressed accounts, and you're expecting it to be under 60,000 crore by March 31st. What is your view as far as the asset quality condition is concerned of the book, and which are the sectors which are still probably at that risky stage?
No, we have to stay alert. We have to stay focused to ensure that the quality of assets don't deteriorate. So that is something which I believe is something which we have understood very well, and we are on our guard. And having said that, I've also observed that normally corporates are coming for the restructuring, not as a first recourse, but as a last recourse.
Right.
So, corporates are quite mindful in terms of their asset quality. They're approaching for restructuring, which will have an impact on their bureau scores, which can have an impact on their future ability to raise money. So I think that kind of appreciation is there with the corporates, and that is something which has helped us all in terms of arresting the kind of trend which we witnessed maybe around 2008.
Okay. So you're saying that we are returning to the trends that we saw in 2008?
No. 2008 was a situation where banks were the first point of
right. So it's not repeating. That's right.
It is as compared to that. Now, the very responsible behavior from corporates. They don't want to approach bank in the first instance. If at all they have got a hope in terms of revival of the cash cycle, they are rather waiting for that to happen and are not resorting to the restructuring right away.
Understood. Quickly, since we have you right a few days after the budget, just wanted to get a sense from you, sir, as far as the bad bank proposal is concerned. I understand it's fully bank-led, at least according to the statements made by finance ministry officials. But where does the government role come in then? Is there any implied guarantee that the government is talking about?
Well, I think we are waiting for the final guidelines. It is too premature for me to comment on any such conjecture. But yes, let's wait and watch for the final guidelines.
All right. Thank you so much, Mr. Khara, for joining us on this conversation.
Thank you. I appreciate it. Thank you. Stay happy. Stay healthy.